And then if you look at their Federal Reserve, their balance sheet assets, it's still $9 trillion. They haven't even stopped any purchase of that. If they stop purchase of that, the economy is going to fall off a cliff. Yields would spike up.
Yeah, well, I'm happy to see you and cover a lot of ground with you today. I want to start by talking the Fed. Now, we saw the impact their last rate hike is having on gold, silver, and especially the crypto complex, leading many to think what's going to happen in June. Could we see another rate hike? And how much more damage could this do to these assets?
Yeah, Danny, I tell you what, inflation, we see it everywhere right now. So the Fed's forced to raise interest rates, and they're going to keep raising them until the economy falls apart. And you know what? If you look at a chart of the Fed funds rate back in 1980, it was at 20%. They hiked rates in 1989. The highest they were able to get them was 10%, and the economy fell apart. In 2007, they only got them to 5%. Each time we've had a rate hike cycle, they've only been able to increase rates half as much as what they had before. In 2019, they got them as high as 2.5% before the economy fell apart, and right now they're at about 1%. So, they're probably going to raise rates one more time. Economy's going to, tip in a recessionary cycle. They're going to have to start easing at that point and start providing stimulus. And then if you look at their Federal Reserve, their balance sheet assets, it's still $9 trillion. They haven't even stopped any purchase of that. If they stop purchase of that, the economy is going to fall off a cliff. Yields would spike up. So they haven't even started doing that yet. So we're looking for one more rate cycle and one more rate hike, and that's about it. And regarding the effect, I'm a silver analyst, Danny. There hasn't been a better time to buy silver and silver stocks in the past 10 years than now. Silver stocks, they've sold off about 30% over the past month. This has only happened 4 times before over the past 10 years. Every time that's happened, the silver stocks are basically up 50% to 100% over the next year.
Just going to focus a little bit more on the Fed before we dig a little deeper on silver prices. Former Fed Chair Ben Bernanke came out earlier this week saying that the Fed made a mistake moving so slow on inflation. Not sure if what you think about his comments there, Garret.
Well, the Fed, they've been talking about raising interest rates for a long time before they actually started raising interest rates because, if they just raised interest rates before letting the market know that they were going to do it, the market would have been major league spooked and it would have tanked. But the equity market is the economy. Everyone's retirement is tied to the equity market. When portfolios are high, consumer spending's high. When portfolios sell off, the consumer spending decreases and slows down the economy a little bit, and that's what the Fed wants to do. But if you look at previous cycles too, 20% off the top is where the Fed starts easing off the gas. And right now, the S&P topped at about 4,800 and it traded down to about 3,840. That's 20% also. So
Yep.
we're at a point where the Fed's going to start taking their foot off the gas.
It's interesting you say that because I think it's such a mixed camp between those who think that the Fed has to keep raising interest rates. I had E.B. Tucker on, who kind of echoes the same thing as you do, saying they're just not going to be able to keep doing this.
Right.
But I guess my question is, let's say if a recession does get triggered, would that
Yep.
be, then what happens to gold and silver prices?
Well, one thing regarding the rates is I just saw something today. It says they have to raise rates, above the real rate, and that's never going to happen because inflation's 7% right now. They're never going to be able to raise rates at 7%. Everything would fall apart. But all that matters is whether the Fed is in a tightening bias or a easing bias. So if they back off, whether economy's in a recession or not, it's going to be good for gold and silver prices because inflation is going to continue. The Fed can't continue raising rates to bring them as high to fight inflation as what they should be able to. And I listened to that EB interview and I agree with him. A lot of people out there, they're worried about a deflationary collapse. Like, it's never going to happen. Why? Because the Fed can print as much money as they can. They can buy as much assets as they can. What's going to happen is a huge inflationary spiral. That's what they choose because asset prices are going to go higher. Housing prices are going to go higher. Portfolios are going to go higher. Everyone's going to feel richer. The Dow's going to be at 100,000, but a bottle of Coke's going to cost $20. And that's the end game.